Dear viewers, welcome to today's video. Ethos, brand concepts, and DLF. Can you spot a common factor amongst these stocks? Well, Ethos is India's largest retail luxury and premium brand watch firms with brands like Rolex, Bulgari, Longines, Omega, and Radu under its belt. Brand Concepts is a microcap, a multi-brand retailer that makes trendy laptop bags, wallets, belts, women's handbags, and other fashion and lifestyle accessories. It has exclusive brand licenses for Tommy Hilfiger and UCB. And DLF, while the name has been long in existence, this year it made waves for selling over 1100 flats at rupees 7 crores in Gurgaon in just 3 days. As per the tweets doing rounds, there were at least 4,500 interested buyers. The rise of middle class in India and the shift from rural to urban has long been a key theme in the India investment story. But now, the evolving theme is the shift to luxury. If not a direct leap, Indians are crossing the bridge to luxury. The rich are getting richer, and we are seeing a premiumization trend. Consider this: iPhone's share in the domestic mobile market used to be 1% in 2019. It is expected to be 6% by the end of this year and projected to rise higher. Four-wheelers, that is passenger vehicles, are growing at a faster clip than two-wheelers. And while the share of entry vehicles is hitting an all-time low in the PV category, SUVs have captured 52% of India's PV market in the month of September 2023, up from 43.6% last year and from 28% in 2019. This is a classic case of value migration unfolding in India. Frugality is outdated, have wealth, flaunt it is the new mantra. Now, I'm not urging you to indulge or to spend on high priced, depreciating assets. But there is indeed a case of getting wealthy by capitalizing on this trend, and I'm keen on the watch list for the premiumization trend. A lot of examples above were consumers shifting to premium products and services. There are also cases where businesses are in an upgrade mode. In simple words, they are adding value to what they are offering and commanding a higher price for it. It's good for their revenue and profits, and indeed a positive for the stock. One such case is Precol Limited. Precol is an auto ancillary player that offers driver information and connected vehicle solutions. We'll call it DICVS. These are the products like speedometer, sensors, telematics, e-cockpits, TFT or thin film transistor clusters, head-up displays, and instrument clusters. This segment accounts for 65% of the company's revenue. 8 out of 10 two-wheelers are supplied by Precol. The remaining 35% comes from actuation, control, and fluid management systems or ACFMS. This includes products like fuel pump module, oil pumps, electric coolant pumps, etc. However, within this segment, a significant share comes from CVs, off-road, and tractor vehicles, which is at less risk from EV disruption. The company is a market leader in its niche. It enjoys a 50% market share in domestic two-wheelers, 58% in commercial vehicles, and 96% in the off-road segment. Due to an earlier non-binding agreement, Precol has been a late entrant in PV with only 7% contribution to the revenue from this segment. But that agreement has come to an end in 2019, and the company aims to grow in that PV segment as well. Coming to the key theme of this video, the premiumization play. In two-wheelers, under the DICVS segment, the average value of Precol's products has moved up from Rs 300 to Rs 1200. Over the next 3 years, it expects the average value to further rise to 2500 rupees. It has been migrating from mechanical driver information system to electromechanical and then further to LCD and TFT and touch screen based systems. In ACFMS also, the average value of its products is going up. From being just another auto component supplier and manufacturer, Precol is evolving into automotive tech solution provider. The company has strong tech tie-ups and R&D in place to make this shift. Its R&D budget for product and process development stands at 4.5% to 4.8% of its revenues. Its recent partnerships include one with Sibros, a Silicon Valley firm founded by ex-Tesla members and backed by Google and Qualcomm. Sibros' cloud-based platform will complement Precol's products in DICVS and telematics to offer complete solution range to OEMs. To further deepen its presence in the EVs, the company has entered an international licensing agreement with BMS PowerSafe, which is a part of Startec Group, to manufacture and sell battery management system or BMS for Indian market. So even if the growth in the auto sector remains muted, the growth drivers will come from premium range of products in the existing and the new launches of vehicles. All in all, Pricol seems well poised to ride the premiumization story while gaining from tech integration in the auto industry. It makes the cut to be in the watch list for the premiumization theme. Now here is a bit about financial profile. The return on equity and return on capital employed for the company stand at 18% and 20% respectively. The revenue guidance of 3,600 crores by FY26 compares to a trailing 12 months revenue of 2,100 crores, and the company expects to reach a steady state margin of 13.5% versus 12% now. The cash on the balance sheet is higher than gross debt, and debt to equity is at 0.1 times. The cash flow from operations has been consistently positive. The stock is trading at a PE of 34 times. Now here is an interesting development in Pricol that you should take note of. Its competitor Minda Corp in February 2023 had acquired a 15.7% stake in Pricol as a financial investor. While Minda has stated that it is merely a financial investment, in May 2023 it approached Competition Commission of India to further increase its stake in Pricol to 24.5%. Now the management of Pricol does not intend to give away the control. They want to be in the driver's seat and keep running the business with full autonomy. The promoters have in fact been buying from the open market to increase stake in the business from 36.53% in FY23 to 38.51% promoter stake in September 2023. As such, in response, Pricol has filed a petition against Minda Corp in Madras High Court, challenging the validity of the application and seeking a restraining order. In July 2023, Madras High Court vacated the interim injunction and the matter is now to be decided by CCI. Now there are two possible outcomes. First, Minda Corp gets permission from CCI for acquiring 24.5% stake in Pricol. In this case, Minda needs to acquire an additional 1.5% to trigger an open offer. Once an open offer is triggered, Minda Corp can possibly acquire a majority stake from the non-promoters in the open offer. In our view, even if Minda Corp manages to raise stake, as a key shareholder, it would want the business to grow further and may possibly seek synergies with its own business. Second possibility is that Minda Corp does not get the permission to acquire 24.5% stake in Pricol from CCI because they are competitors and an acquisition can make the market distorted. In that case, business runs status quo. Now, unless there is a clear verdict, this event could be an overhang for the stock. In my view, in the long term, whichever way it goes, the business has the potential to grow. Now do note that this is not a recommendation, but a company with a promising business potential which deserves to be on your watch list for the premiumization theme. With this, I've come to the end of the video. Let me know your feedback through your comments and press the like button if you found it useful. Subscribe to Equity Master YouTube channel for more such updates. Thank you for watching. Goodbye.